Something just broke in the financial system. And I need you to stop checking your portfolio for a moment. I need you to stop celebrating the green numbers flashing on your screen. Because what you are witnessing right now is not wealth creation. It is wealth destruction disguised as a rally. The markets just gave us a signal that has not appeared in 50 years. It is a signal that economists call impossible. It is a signal that appears in textbooks right before the chapter on hyperinflation. And if you do not understand what this signal means, you are about to lose everything you think you own. We are looking at the scoreboard, and the scoreboard is lying to you. On January 28th, the S&P 500 smashed through 7,000. At the exact same moment, gold hit an all-time high of $5,300. And silver, the metal they told you was dead at $90, broke $115. The President of the United States is tweeting in all caps. America is back, stocks huge, greatest economy ever. The financial media is celebrating. Your retirement account is showing numbers you have never seen before. And if you are a casual observer, if you're just someone watching the ticker while you drink your morning coffee, you might believe the narrative. You might think you're getting rich. You are not getting rich. You are getting robbed. The robbery is happening in broad daylight while they play patriotic music and tell you to celebrate. Let me explain what just happened. In a functioning economy, there's a seesaw. On one side, you have risk assets, stocks, technology companies, the things you buy when you feel brave and optimistic. On the other side, you have safe haven assets, gold, silver, bonds, the things you buy when you're terrified and want to protect what you have. When one side goes up, the other side goes down. That is the rule. That has been the rule for 100 years. It is how the machine is built. It is how risk and fear balance each other out. But on January 28th, the seesaw snapped in half. Both sides went up at the same time to record highs. Do you understand how terrifying that is? If stocks are rising, it means people are optimistic. They believe the economy is strong. They believe corporate earnings are growing. But if gold is rising to $5,300, it means people are terrified. They believe the system is breaking. They are running for the exits. They cannot both be right. Unless neither of them is moving, unless the floor beneath them is collapsing. This is what the Austrian economist Ludwig von Mises called the crackup boom. It is the moment when the public realizes that the currency itself is dying. Not the economy, not the companies, the measuring stick, the dollar. When a currency enters its terminal phase, it creates an optical illusion. Everything appears to be going up, your stocks go up, your house goes up, gold goes up, but nothing is actually rising. The ground is sinking. You are standing in an elevator that is falling, and you think you're going to the moon because you see the floor numbers changing. Floor 10, floor 20, floor 100. But you are not going up. The building is collapsing around you. The S&P 500 is not at 7,000 because Apple suddenly sold twice as many iPhones yesterday. Apple is the same company it was last week. The S&P is at 7,000 because it takes 7,000 of your worthless, but debased, printed out of thin air dollars to buy the same basket of stocks that used to cost 5,000. You did not make a profit. You made an inflation adjustment. And if you do not understand the difference, you are going to be the person standing in line at the grocery store wondering why your account balance looks great, but you cannot afford to fill your cart. History gives us the answer. In Weimar, Germany in the 1920s, the Berlin Stock Exchange went to the moon in Marx while people starved in the streets. A loaf of bread cost a wheelbarrow full of cash. In Zimbabwe, the Harare Stock Exchange was the best performing market in the world right before the currency collapsed completely. In Venezuela, stocks went vertical while people ate rats. The pattern is always the same. The stock market goes up because the currency goes to zero. And now we are seeing it in New York. Gold is the lie detector. Gold is the alarm bell. If the economy was truly strong, if corporate America was truly booming, gold would be crashing. You do not buy fire insurance when your house is made of stone. You buy fire insurance when you smell smoke. And right now, gold at $5,300 is telling you that the entire financial house is engulfed in flames. The smart money knows this. The institutions know this. That is why they are buying gold at the same time they are buying stocks. They are not choosing between risk and safety. They are fleeing cash. They are saying, we do not care what we buy. We just need to get out of dollars before the dollars become worthless. And here is the most dangerous part. The part that makes this moment different from every other market rally you have ever seen. The velocity, the speed of the collapse. Look at the dollar index. The DXY just smashed below 96. It is trading at 95.8. Year over year, the dollar is down 10.7%. That means if you held cash in a bank account for the last 12 months, you lost more than 10% of your global purchasing power without spending a dime. You were robbed while you slept. But let us look deeper. Let us look at the real money pairs. The Swiss franc, the dollar is down 14.1% against the franc. The euro, the dollar is down 12.15%. The world is dumping the dollar. Central banks in Asia are selling. Sovereign wealth funds in the Middle East are rotating out. Pension funds in Europe are diversifying. They are all hitting the sell button at the same time. And what are they buying? Gold, silver, real assets, things that cannot be printed, things that have no counterparty risk, things that will still exist when the Federal Reserve's balance sheet finally implodes. This is not a normal rotation. This is a stampede. And the stampede is being led by the people who actually understand how the system works, the people who have access to the data, the people who sit in the rooms where the decisions are made. But there's another part of this story that reveals who is winning. China. We just received the data from February 7th. The People's Bank of China extended their gold buying streak to 15 consecutive months. They bought in January during the crash. They added 40,000 ounces. Reserves jumped from $319 billion to $369 billion, a $50 billion increase in 1 month. This is not speculation. China is positioning for the post-dollar world. They watched the West freeze Russian reserves overnight. They said never again. So they are buying gold that cannot be frozen or sanctioned. And Chinese citizens are buying too. Bar and coin demand was up 35% in 2025. When 1.4 billion people decide paper currency is a scam, gold goes parabolic. Now let us connect this to what is happening in the stock market. Because the stock market rally is not what it appears to be. The S&P at 7,000 is not a reflection of economic strength. It is a reflection of monetary desperation. The Federal Reserve has lost control. The government is printing trillions just to pay the interest on the debt. And that money has to go somewhere. It cannot just sit in a bank account earning 0% while inflation is running at double digits in real terms. So it flows into assets. It flows into stocks. It flows into gold. It flows into real estate. It flows into anything that is not cash. This is the liquidity tsunami. And the tsunami lifts all boats. The good boats, the bad boats, the sinking boats, everything goes up. But this is not wealth. This is debasement. When the central bank prints $2 trillion and dumps it into the economy, it does not create value. It dilutes value. Every single dollar that already exists in your pocket is now worth less. You are being robbed by inflation, and the robbery is being disguised as a bull market. The media will tell you that the economy is strong. They will point to the S&P at 7,000 and say, look at how well we are doing. But they will not tell you that the cost of food is up 20%. They will not tell you that the cost of energy is up 30%. They will not tell you that your purchasing power is collapsing while your account balance is going up. This is the trap. This is the seduction of the crackup boom. It makes you feel like a genius trader right up until the moment you try to convert your paper profits into real goods, and then you realize that the paper is worthless. The number on the screen is big, but the number does not buy anything. You are rich in a currency that is dying. You are a millionaire in Venezuelan bolivars. You are a billionaire in Zimbabwe dollars. Congratulations, you can use your money as wallpaper. And here's the signal that confirms we are in the late stages of this collapse. Bitcoin is lagging. For a decade, the narrative has been clear. Bitcoin is digital gold. Bitcoin is the future. If the dollar collapses, Bitcoin goes to the moon. But look at the scoreboard. Gold is at 5,300. Silver is at 115. And Bitcoin is stumbling. It is acting like people forgot it exists. Why? Because this is not a speculative mania. This is a physical panic. When the system is breaking, when the supply chains are fracturing, when the trust is evaporating, the market does not want digits on a blockchain. The market wants atoms. The market wants things you can hold, things you can touch, things that existed before electricity and will exist after the grid goes down. Investors are realizing that you cannot build a solar panel with Bitcoin. You cannot put Bitcoin in a cruise missile. You cannot use Bitcoin to conduct electricity in an electric vehicle battery. Bitcoin is an idea. Silver is a necessity. And right now, the world is running short on necessities. The smart money is rotating out of the speculative digital assets and piling into the tangible physical assets. They are choosing 5,000 years of history over 15 years of hype. And that rotation is creating a commodity supercycle that is going to leave the crypto bulls scratching their heads wondering what happened. Now let me explain what this means for you. Because this is not just an academic discussion. This is not just a fun story about markets behaving strangely. This is a survival guide. If you do not understand what is happening right now, you're going to make decisions that will destroy your financial future. So let me break it down. The impossible signal, the S&P and gold rising together, is telling you that the currency is in free fall. The denominator is collapsing. And when the denominator collapses, the math changes. Your retirement account might say you have $500,000, but what can $500,000 buy? If the dollar loses 50% of its value, you do not have $500,000 of wealth. You have $250,000 of purchasing power trapped in an account that shows a number that does not matter. This is why gold and silver are not just investments. They are lifeboats. They are the assets you hold when the ship is sinking. And right now, the ship is taking on water faster than the pumps can bail it out. The Federal Reserve is trapped. If they raise interest rates to defend the dollar, they crash the economy. If they lower interest rates to save the economy, they destroy the dollar. There is no way out. There is no good option. They are going to choose the path of least resistance. They are going to choose the printer. They are going to sacrifice your purchasing power to keep the system alive for one more quarter. And the evidence is everywhere. Mary Daly, the president of the San Francisco Federal Reserve, just gave a speech saying we may need 1 to 2 rate cuts this year because the labor market is weakening. Translation: the economy is breaking. We need to print more money. The CME FedWatch tool is pricing in 2 rate cuts in 2026. Translation: the market knows the Fed is going to ease. Lower interest rates are coming. And lower interest rates are rocket fuel for gold. When the cost of holding a non-yielding asset like gold goes down, the demand goes up. When the opportunity cost of owning gold decreases because bonds are paying nothing, capital flows into gold. But here's the thing that nobody is talking about. The rate cuts are not coming because the economy is strong. They are coming because the economy is weak. And weak economies do not generate real wealth. They generate inflation. The Fed is going to cut rates. The government is going to keep spending. The deficit is going to keep growing. And the currency is going to keep collapsing. So the S&P might hit 8,000, gold might hit 6,000, silver might hit 150. But the prices are meaningless if the measuring stick is broken. So here's what you do. Stop celebrating the green numbers. Stop thinking you're getting rich because your brokerage account hit a new high. Start asking the real question. What can I buy with this money? If the answer is less than you could buy last year, you are not winning. You are losing. And the only way to stop losing is to get out of the burning currency and into the hard assets. Get into gold, get into silver, get into things that cannot be printed, things that have intrinsic value. Things that the world will still want when the dollar is a footnote in the history books. The impossible signal just flashed. The seesaw broke. The rules changed. And the people who do not adapt are going to be the ones holding worthless paper, while the smart money holds the metal. This is not a drill. This is not a correction. This is the beginning of the endgame for the fiat currency system. The crackup boom has started. And by the time the mainstream media admits it, it will be too late to act. The metal will be gone. The vaults will be empty. And you will be standing there with a bank account full of numbers that buy nothing. The S&P at 7,000 and gold at 5,300 is not a celebration. It is a warning. The system is not working. The currency is dying. And the only people who survive are the ones who see it coming and move before the exits get crowded.